Welcome, G3 investors. Well, the market stalled this week ended August 19th, 2022, right below the 200-day moving average after a full 4-week rally off the bottom. Here we're looking at a chart, the S&P 500 or the SPY, which represents it, and you can see 4 weeks up, and then we stalled right below that red line there. That's the 200 daily moving average or the 40 weekly moving average, which are one and the same. So if we look at the SPY on a year to date, you can see this is a 1-year chart of the SPY, and you can see it stalled right below that. And if we look at the NASDAQ, we get the same. And if we look at the Russell, the IWF, which is the Russell 1000, same look. In the mid-cap, or the 400 mid-cap growth, same look. It actually peaked above there for a day or so. So it's a little stronger than the others. Now, 14 of the ETFs that we trade, of the 21 that we trade, so 2 to 1, look exactly like this or very similar to this chart. Just to give you an example, we'll look at the semiconductors. It's even a little uglier because it's way below. It's quite a bit below its 200-day moving average. But if we look at the financials, you can see it looks the same. And of course, technology is going to look the same. But if we look at the industrial sector, that's one that is not. So that one is one of the 7 that's above. So it's above the red line there. Still weak. Still looking weak, still looking like it wants to roll over, but it looks a little bit stronger than the other. If we look at where the strength is in the market, look no further than natural gas. Here it is. It's almost at a yearly high. It's amazing. Never would I thought I'd see natural gas at this level in the middle of summer, the dog days of August. But here we are. And if we look at the energy companies, the XLE, you can see it's not quite as strong, but it's above both its 50-day, which is the red, or I mean its 200-day, which is the red line, and the 50-day, which is the blue line here. So, and we actually have a position in that one. And it's our only position. So if we look at the United States Oil Fund or oil prices, we can see that it's above the 200-day moving average also. Metals and mining, just barely above. That's a pretty weak looking chart, but it is above the 200-day. Defense, aerospace and defense. So a sideways move, but it's above its 200-day moving average. And last but not least is another sideways mover, which is the healthcare sector. And that's gone totally sideways as well. Now we had Bed Bath & Beyond. I just want to look at this one. This is an individual stock, but talk about a crash. The major investor, Ryan Cohen, sold out his entire position in Best Buy Thursday and Friday. I think he had over 9 million shares. So that was a pretty bad move, if I do say so myself. So how did our model do? Well, the dog days of August, we only made 3% this month. That is depressing. But hey, you got to take what the market can give us. Believe it or not, we're still doing okay. The S&Ps were actually a little ahead of the S&P and the NASDAQ for the month, and we're absolutely crushing it year to date. As always, if you want to become a patron, use that to sign up, and you can find me on my YouTube channel here by putting that green one in. Before I go here, let's take a quick look at the heat map. This is a 1-week look at the S&P 500, and It looks kind of mixed. There's a choppy week. There's the energy. It's doing, the oil and gas companies doing good. A little bit of healthcare there. Consumer defensive. We don't play that one, but that's all it is. Well, that's all I have for this week, folks. This is Greg Gallagher, wishing you good luck and good trading.